Okay, folks. Sorry being late. Had a bunch of details to go through. Welcome to the Kindle Report. And another big day. We printed STX twice in as many days. Yesterday we printed an STX number and we did it again today. So major selling going on here. And the question is, we've got PCI coming out tomorrow, or PCE, and is that going to accelerate? I'm expecting that that's the case. We look at a number of things that came out today. You would think we had some really great economic news, right? GDP up 4.9%. The deflator, though, was up to 3.5, and the expectation was 2.7. So if this is the same thing we're going to see with the PCE prices, then guess what? We're going to see a hotter inflation, and we're ticking closer to the Fed meeting. So what did today's sell-off really, what was that really about? There's a number of things. I kind of got stuck on Twitter today talking about something that I thought was fairly interesting from the standpoint of what's going on in the auto industry. Mercedes-Benz just gapping lower, Siemens getting creamed, all of this stuff. And I know I'm going to get some criticism here, but hey, let's just go for it here. The whole global warming narrative, all this transition to electricity, all of these things, in my opinion, is bankrupting the auto industry. And even Siemens, they're begging for money from the German government. It's almost impossible, from what I understand, to lay off people in Germany. So these companies are going to need more help from the sovereigns, right? And it's the same thing here. I mean, you look at, maybe I'll bring up a few of these tonight, but Ford, GM, Tesla is about to break 200. I'll show you some, maybe we will do the autos again tonight. I'll do those maybe after, let's do them after the Russell. So we'll kind of complete the equity section there before we go in to some other stuff. But folks, this stuff's getting pummeled, and all these policies and this EV transition and all this stuff is just destroying the economy. I think maybe that's the point of everything. You know, you got UAW, they go out on strike. I guess they've got a tentative deal with Ford. They still got other axes to grind with other people, but they're setting something up here that is going to get really ugly, is what it's looking like. And they're going to, what would be, I was going to say derail, but this whole auto industry is really not doing well. The narrative around here, what's being talked about, I was watching some stuff on Bloomberg early this morning, and the narrative is that this is because the economy's slowing down. And I'm raising the BS flag here as, no, that's not what's going on. What's going on here is you're seeing the ICE vehicles are still fairly good shape and profitability, but they can't make a dime on any of these EVs. And it's, you know, what Tesla's lowered prices multiple times now. Not sure. I'm not a big Tesla. I don't follow it really close. But just to speak from what has collected in my mind as I live around these markets, is they keep lowering prices and revenues are okay, but their margins are just shrinking and all this stuff. Even their biggest supporter, Kathy Wood, she's downsized her original position, I think, to like 10% of what she originally bought. She still talks a big game on when she's talking about Tesla, but she doesn't own it like she used to. And so just a lot going on there, folks. And, you know, not only are they trying to build all the vehicles, manufacture the vehicles, but there's no way to supply the power for them. And I made this comment in my tweet. I'll just kind of break it down a little bit further than what I could do in a few hundred characters, is really you got to build probably nuclear reactors. They're smaller. They're lots better. They're not as dangerous as they used to be. we could solve all the energy problems, and then maybe I'd be somewhat on track with this EV thing, but you still can't make the batteries and you can't do all the stuff. And I think probably the funniest thing, this is going to be one of those nights tonight that it's just got to happen. But Greta Thunberg was trying to figure out how to have, I'm joking here, this is pun, is trying to have electric missiles so they'd be more eco-friendly, and trucks or tanks that were electric while you kill people. How funny is that? Oh my gosh. Anyway, this thing has just gotten completely stupid. And now what you're seeing is years of this narrative starting to grow. And now you're seeing the economic impacts on this. And a bunch of people on the channel have been telling me, EVs don't have to be 100%. I get it. Listen, I'm not against them. That's not what I'm saying. What I'm saying is it's not going to work out economically, and we've got sovereign debt through the ceiling. We got $33 trillion worth of debt in the U.S. All of the European governments, everybody's upside down on debt. So who's going to finance this? They're going to make more money? Is that more inflation? Where are we going with this thing? I'm almost ready to argue that we're going to Zimbabwe type inflation if they keep this up. I mean, is the narrative really that important that all this stuff is going to be driven down our throats in spite of what makes sense for right now? Maybe technology comes along. I'll go on this rant for a few more minutes, but maybe if technology comes a little bit further along, maybe there are other types of storage devices, other ways to do things, then sure. I mean, who's not for cleaning up the planet and all that? But it's not going to work economically if you can't afford it. I think there's, I saw really, every once in a while, I told you before, sometimes I'll click on, to my left here is a 55-inch screen with Bloomberg on, and sometimes I'll have some interesting characters come on. And one guy was talking about the other day, and it kind of makes sense as a super cycle in oil coming, because we're going to continue to need this. So now the cost of oil is just going to have another leg up. And, maybe we hover around where we are right now, but it was, back in the day, I remember since my career back in the early 80s, crude oil being $10, and then of course we saw in the pandemic or around there, we saw the minus 40. But the reality is that we've just seen stair stepping as demand continues to grow, and there's a lot of fossil fuels around still to be harvested yet, in spite of everyone saying that we're probably done there. So so we'll go ahead and we'll cover some of these stocks, but you'll see them. We'll bring up the monthly charts, and these are not pretty charts in the auto industry, folks. And I'm sure there's others. Probably the other farce that's been played out a lot is the ESG stuff. There's I forget the name of this group. They're I forget where they're from, but they're big time ESG stock shorters, and they have just made a ton of money shorting these things. So all of this stuff is being subsidized. I posted something on Twitter that I think that the average subsidy just around Tesla is like $50,000. I mean, this is not economically feasible. People talk about our debt. This thing makes the debt look like it's easy compared to what's going on. All right, I'm done. Let's take a look at a couple other things that I have note here. So the PCE tomorrow is expected to be at plus 0.4. We're looking at year over year 3.5, and then the core is expected to be 3.9. I would expect this to be a little hotter than expected, and then this is going to bring up the dialogue of the Fed raising rates. But look at what happened to the Treasuries today. They rallied big time. The yields plummeted, and so this is part of what I was talking about last night. We were pretty much at the extreme, and like I said, there's just a lot of people that have been long the bonds are now talking about getting out, which is perfect bullish sentiment to turn here. So I'm just looking at my notes. I got quite a few here. Yeah, let's talk just real quick about claims that came out yesterday. 210K continuing claims up a bit, 1.79 million. Durables came in 4.7, expected to be 1.5. Here's the stronger economic stuff, and you would think that's why I'm saying. I guess good news is bad news. I posed that question yesterday. I guess now we know that answer. So. Yeah. So anyway, so let's do something, folks. I'm going to bring something up on the screen before we go into the WaveTech database tonight. There should be a link in tonight's video on how to get signed up for the upcoming seminar that I'm doing on November 9th and 10th. And the 9th will start at 4 o'clock. And let me just put this up here real quick. And so this QR code works. This will take you to the page to get your ticket. Now, it's not a free seminar. And I don't know if people thought it's a free seminar, but it's not. It's 2 days. I'm putting an awful lot of time. We're going to be recording this. There's going to be a course that you're going to be able to go back and watch all these segments. I don't know how long. It'll probably take us somewhere between 7 and 10 days after the event to get everything cropped and put into the course format. But you'll have this forever, and you can. It'll start at 4 o'clock on the 9th, and then on the 10th is actually Veterans Day, and we're going to start, I believe, at it's 1 to 4 or 1 to 5 on Friday. But the agenda, everything will be out here shortly. We're still putting a couple little pieces of the puzzle together. Now, originally, I was going to do a live event. I really want to do a live event. It'd be awesome to meet a bunch of you. And it just was getting very complicated to do. So we're doing the virtual event. It's going to give us the ability to get this done before year end and before we all start thinking about the holidays and all that stuff. So we'll slide it in just before then. I'm also, the week after this, I'll be out of town from the week of the 13th. So anyway, this will give a good dosage of learning, but it's going to be really intense. I'm going to take a bunch of techniques, show you how to use the indicators. So it's going to be circled around Bob's world. This is about what I do and showing you how to do the analysis and how to set up trades to do all that stuff. So anyway, so get signed up, and shortly after you get signed up, until we find out how many people are going to be at this event, we've got a couple different software platforms that will decide what we use once we know how many folks are coming. So you'll sign up, you'll get a thank you, and then after that, you'll be getting the links sometime several days before the event. All right, enough of the advertisement, but I know, listen, if I could tell you how many hundreds and hundreds of emails I've gotten, people wanting the masterclass. So it's coming, folks, and I'm super excited about it. There's putting graphics together, working on the whole platform. I'm going to be like a crazy man getting ready for this. Got a lot done, but there's a lot more to do. Okay, let's go ahead. Let's go into the WaveTech database and check out exactly what we are seeing happen. And it's starting to get ugly again. Let's go for it. Yeah, so I see somebody asking, is it free for folks that bought the indicators? No, it is not. it's actually discounted quite a bit. I used to charge a lot of money to do a 2-dayer like this. So this is because there's no venue and because it is virtual, it's going to allow us to really do this at a very reasonable rate, because the to charge enough to pay for hotels, and all the facilities and everything it takes to put a conference. One of our conferences, I know we spent $150,000 just for the venue. So these things are very expensive to put out, but this will at least get the content for a lot less. Okay, so let's get into the database. We did see some more attrition: 421 sells, 128 buys, and that is puts it down to 14.6% bullish. My expectation for the intermediate for the weekly models will be down probably under 32%. I think this is a pretty ugly scene that we have coming here. And it's going to be, I would say, continuing to decline. The numbers that we'll watch for, let me just go full screen here and bring that up just real quick. Let's just go over here to the weekly. Weekly's at 36.39. I suspect this is going to drop down. Maybe next numbers we're going to look at on the intermediate is going to be around 28 to 22. And that will be, hopefully that will be the end of it, but we're definitely seeing a liquidation start. We get under 28, 22% is where we signal a full liquidation, which means we get into a serious move down. We do have, as you'll see here in a minute in the technicals, we do have a few things that have to be reckoned with from the standpoint of the of some of the Fibonacci targets on the downside and support levels. This little decline that we started when we took out Monday's low has triggered at least a minimum of 2 days of lower prices, which we have actually have seen that materialize. I noticed we got a decent pop on the reopen of the futures for tonight. So we'll go through all the details right now, but we still have two sectors long, and we have conglomerates and healthcare. Those, I would argue maybe healthcare is a little bit of a defensive sector, but everything else is flat. And I suspect we'll see quite a bit more selling coming into the database. It just doesn't look like we're going to be able to move beyond this point in time. And even if we stay where we are now, it's going to take a number of weeks and probably as we come into year end before we're going to see enough of this stuff to a consolidation and a rotation that goes on in a database before we're going to be able to set up any kind of rally. So it looks like more of a continuation as we come into this week. Here's the hourly. Like I said, we got a little pump on the higher opening here. We did. We're trading right here at 73. It was interesting because in that coming in right before that last hour, we printed up to 91 again. We printed 40. Yeah, I think it was 41.91 was the high on this bar right here. 41.91.25, and then we got big reversal, and this is the hourly, and then we got an STX buy signal off the hourly, and now we've seen two 2 hours sideways. Expectation here is very choppy overnight, and whether or not we can move up into this higher prices here. There's 3 new Fibonacci targets on the hourly that's laying out there right now. Those are for a move to 4180, 4193, and 4201. We did see some prints early in the day yesterday. We'll cover this in the daily chart here in a minute, that we did print over 42 handle. But there was probably one of the most best reversal trades off of the open this morning, and up around 4,200. It was trading up there a little bit before the market open this morning. Probably had one of the best days that I've had in years and years today. There was some crazy swings again as this market just continues to have some amazing volatility. We should start to, let's go ahead and take a look at the daily so we can set up market grid and some expectations there. So we still have this downward channel. It looks to me that we could still be under pressure, at least consolidation pressure, for another couple days into Tuesday. It won't be until next Wednesday. You know what day that is? November 1st. I believe that's your Fed meeting. So we're going to, it looks like from there, from the algo standpoint, we're going to improve. And whether that comes to be true or not, it's a little too early. These algos are good for 2 or 3 sessions out at some point in time, but we're really looks like we've got some work to do. Maybe a little positive on Friday, but then we sit back on Monday, Tuesday in anticipation of whatever the Fed's going to do. That'll drive the market narrative and the sentiment from that standpoint. But we look at the market grid for today, and we're looking at S1 4142. Yesterday's low. Let me get these numbers up. Yesterday's low was 46. So S1 for today would be a 42 print. And we may have plenty of volatility to print down there. There seems to be some massive sellers out there, and they hammered this market down. There was a really good trade off of the STX today. And when we got down there, like I said, there was a trade up, and then it retraced, went down, and that big trade, there was a 30, 35 handle trade, depending on how aggressive you were trying to catch that thing, as we traded up to that 91 number. And then it collapsed 30 handles coming into the close. I mean, if you were on this thing today, there were some amazing swings. And of course, if you get any of them wrong, you're probably not watching the video tonight, because they easily, in a day like the last 2 days we've had, could steal all your money. No problem there. But the range looks like maybe an S1. R2 is 4186. And if we can print above that, then R3 is 4201, 4215 RTX. It's possible to print this thing up tomorrow. Just people covering up over the weekend. We got the Israeli-Palestinian situation going on, geopolitical risk. We'll see if anybody wants to stay short over the weekend. A couple things I do want to talk about, and this was the Fibonacci targets that we talked about last night. 41 even is that target, and yesterday's low, I mentioned the STX number, 4147 was STX. We bounced right off of that, the low 4146.25. So we went through that number by about $1, and it just reversed out of there. It was pretty substantial. If I brought up the intraday charts, you'd see exactly what I'm talking about here. So the original pattern, we had 5 down, expecting a possibility of 2 up, but looking for some type of rejection off the 10. We only got literally 1 up, and then the next day was a reversal. We got another reversal, if we count through this, today is day 8 of this pattern, and most likely we'll usually get an 8 and possibility of a 9. So we could see, even though we maybe get a slight uptick, there might be one more bar in this pattern before we complete it. This is an extended pattern. There's a couple things here that have happened. PPM1 is at a minus 0.42. I've talked to you about this before. It's around a point. If we get above 0.5 on PPM1, then that would suggest we'd get an extended pattern down, so there'd be more in this. If that's the case, we test 4,100, and then Fib target 2 is all the way down at 39.73, and I don't expect to see it hit there. In fact, if with the Fed coming out next week, it's very likely that Powell's going to try to maybe, how's the best way to put this, to jawbone this thing into neutral, maybe put a dovish tint to what they're saying. If you look at what the EC, so here's the thing, folks, when you're talking about the Fed right now, and they're in the quiet, right? They can't talk right now. But guess who can talk? You look at Lagarde, you look at the ECB. She is the mouthpiece right now for the Fed. So these folks all work together to keep their narrative going. And she's been talking a little bit, trying to be a little dovish there, but going, well, I'm not saying we're not going to raise rates higher. This isn't the peak rates. If you look at some of the comments that came out of Lagarde here in the last couple of days, she is talking for the Fed. And that there's no doubt in my mind that these folks are, they're on the phone every day right now as they come into this meeting, because the Europeans are in way bigger trouble than U.S. I mean, look at this, 4.9 GDP, durable goods up, retail sales going crazy, and everybody trying to talk this thing down, and it doesn't go down. And then meanwhile, you go to Europe and you're getting Mercedes-Benz and Siemens and a whole bunch of other stuff just getting hammered. So it's becoming obvious that the U.S. still is the strongest place on the planet. And some of these numbers, like the GDP numbers and some of these other numbers, are probably getting exaggerated just by the prices and the inflation that's in the economy. So it's not just pure output. I mean, the numbers add up. It's the same thing with the retail sales the other day. It sounds good, right? The numbers look good, but are they really that good? And I think it's interesting the way the markets have been trading. And I just, once in a while, I get triggered by some of this stuff. And like I said, this whole narrative around electric vehicles, and meanwhile watching all of the auto companies on the planet just get hammered is very interesting. So I'll remember to go and do just some of these stocks here in a few minutes, and we'll go through the auto stocks after we go through the Russell. Let's take a really quick look. I want to go over to the weekly S&P for just a minute here. And the algos were suggested we'd get an up week, and then they turned south, and it looks like to me that we're looking into 1st of November before we've got a shot at getting any real traction. So this general trend that we have on intermediate is going to stay in place, and we may find it when we get down the road that it's even getting weaker from there. One of the things that I am looking at when we do our monthly review, I will be doing that. I'm trying to look at the date here real quick. That will be done on, it won't be done until the Monday or Sunday the 5th. On that will be the next time that we do the long-term outlook, and I will cover all that stuff then. We'll have behind us the Fed, everything that's happening here. So looking at the weekly, this is what I wanted to just point out here before we move on, is the weekly, we're looking at 4138 is S3 weekly. So we printed, like I said, 46. And that looks like that we've got probably satisfied for this week. Like I said, next week has got a slight uptick on it, but then the week after, as we come into the 5th and the 6th, the second week of November starts to look weak again as we come in at that point. So then it's possible that we're going to bottom maybe around as we come into that maybe into the holiday season with Thanksgiving here in the U.S. But there's definitely still a lot of pressure down. Our database tells the whole story. Like I said, my expectation on the database and intermediate to get worse. Everything is really pulling back and getting in cash right now. So caution is definitely, if you're utilizing Wave Tech, you probably should already be in heavy cash, at least 40+%, 30 to 40. And it's probably going to expand from there as we come into year end. This is almost the opposite of what we saw last year at this time. All right, let's move on to the Nasdaq. All right, I'll stay on the weekly charts here for a second. And one of the numbers I was talking about yesterday, we actually printed down to it. And that number was, let me just give you a number here, 14,127. We got down to 14,140. This is a weekly chart we're looking at right now. So we're down into that wedge. This should be the extreme. There's also a Fibonacci target down there at 14,266. And that was that number I talked about the other day of printing down between 266, 150 range. So that probably isn't extreme, but if you look at the Nasdaq, we've got more downside here. So one of the things that was set up pretty clearly by market sentiment is with all the the Magnificent Seven reporting this week, we're seeing a lot of carnage there, especially with the exception of Microsoft. It's been pretty stable, but Amazon's up a little bit. Meta was off yesterday. Google, Alphabet got hammered. All of that stuff has been under pressure. So there definitely is a rotation going on this index. And you can see also here 42,210 and 14,069. So 14,210 and 14,069 is S3 STX on a weekly basis on here. So let's go over here and go to daily. And daily's pretty similar. Possible update today, coming into Monday, maybe a bit of a sideways, probably hovering right around coming down to the 200-day moving average. That 40-week moving average on the Nasdaq weekly is very similar to the 200-day on moving average value. So we look at that. And it's let me get the right number here. 14,030, that's right to that, around that 40 period moving average on a weekly. So this should be reasonable support here. You still have PPM3. PPM3 is actually negative, and we still have a positive PPM 200. So you can see that upward slope, probably enough to get a bounce off of this level, and then, but maybe not the end of the downtrend. It looks like there's some possibility for us to ultimately challenge the 10-period moving average, but that's weeks from now. So once again, that wedge formation between the 200 and the declining 10-period moving average, the advancing 200, we should get sandwiched in that area, and it contracts into a place where down the road as we come into maybe first, second week in November is where it looks like it's being targeted again. More looks like this second week than the first. So we'll see as we come into that. The first full week will be because the first is on next Wednesday. So the first full week will be the first opportunity maybe to see this thing move around a bit. Yeah, it's amazing. We did see the Russell actually print higher today, which is interesting. The banks were up. Russell was up 0.34, while the S&P was down 1.18, and Nas down 1.76. So it got a little bit of a print up, but everything from the algo standpoint looks like sideways to down. We will know possibly after today across the board on all these indexes whether or not we printed the low in this particular sequence. But there's still tons of downward trends here. PPM1 minus 0.36, PPM2 minus 0.38, and PPM3 is also in a minus 32. So this angle of attack on all three trend levels are down. This takes a while to even consider getting any type of rally above the 10-period moving average. And I would use the simple 10 that right now is at the 1703, and it's dropping about 6 handles per day. That's going to be the point. If you print it up to around 1700, you probably get a rejection from that point. All right, so as I said, let's start with Mercedes-Benz. So let's do a couple of these stocks. This is the daily gap down, but what I want to do is bring up the monthly charts, and just so you can see this, big distribution up here, and things are going down. I was arguing, just for the record, I don't know if I said it on the channel or not, but I was arguing with a buddy of mine that when Elon Musk was going to buy Twitter, he should have bought Mercedes-Benz, is what he should have bought. And that would have been, could have improved the quality of Teslas, because they're basically really not very nice inside. They're not real luxury cars, but they could have really teamed up and done some amazing things, but that's not what happened. He bought Twitter instead. But we're breaking through this is monthly here, folks. We're breaking through all this. I don't have the algos working on this chart, but let's just start there and let's just go right down the list. Mercedes breaking down. It's still at a relative higher level, but you're starting to see the stressors come in to this into this market. But we go to Ford. Monthly, Ford's just distributing down below. If we go over here to weekly, you can see a couple things here. As Ford on a weekly basis, there's some Fibonacci targets for Ford down at 907, 760, and 670. So I'm pretty sure if they just did a deal with the UAW, they're going to suck them dry on this thing. They're going to take this thing down. But it's interesting because while the PPMs are on PPM 1 is starting to turn up. It looks like it's turning up, and this is a really important thing to understand. It's negative 0.50, even though what it's doing is just losing its momentum. If we carry it out here, it's going to take a lot to be able to get above this 10-period moving average and with this downward slope here. So let's do GM. We'll finish there. GM's just another real dog. These are weekly. There is right in this level here, right around 29 bucks is where the pivot is. And we do have some downward fib targets down here at 24 and 21 bucks. I'm just rounding them off. And so it just looks to me like even though the algos are starting to bottom out, these things are just coming apart, and they're big downtrends. Especially if we come over here, this is General Motors on a monthly basis, and we're breaking down. We're actually about to potentially get an STX buy signal, but it's just sideways. I mean, this company's got nowhere to go, and I don't think we'll see if they get a deal, what happens here. But when I was looking at this stuff earlier, it's just obvious that these the best thing you could hope is that these companies stay sideways and don't get sucked dry by some of these deals. I would argue that certainly people need a raise for sure. I don't know about a 40% raise, but they need a raise. But this is just, I think, an industry that's just got nowhere to go. This is starting to be like the airline stocks of back in the day. There's just no money in these things. And last, we'll do Tesla. Let me go to the weekly on Tesla. So Tesla's got fib targets out here right now, 192, 158, and 134. So it does look like there's more downward pressure, but I would expect that this is going to be the big number right here at the 191 level. If we close below that, then it's Katie bar the door, because you've got some serious selling pressure coming in. And if we go to the monthly chart here, there's not a lot of data. But I remember back in the day in 21 when we got this RTX sell signal. It's just been basically down and consolidating. And you could argue that we're probably going to head back to the 21 lows here at 130, 100 bucks. That's certainly a possibility of some support around the 152 to 135 level. But if that level doesn't hold, then Elon will not be the richest man on the planet anymore. Between losses at Twitter/X and Tesla, this is not a good looking chart, in my opinion. Could consolidate some more. This is the longer term stuff looks pretty negative, especially when you start to get up here. Look at the intermediate trends. There's a lot of pressure down here. Okay, let's go ahead and let's get into the treasuries. So I mentioned this yesterday. This is a weekly 10-year. We had an STX sell signal last Friday, and we did not print above last Friday's high here. We're coming back in, and most likely are going to move. We're going to see when the update happens on Sunday, we're going to see the market grid turn down. And this is something that I've been kind of harping on for a number of weeks on, is that we're going to start seeing the momentum, the upward momentum on Treasury start to bleed off here. It's still got plenty of upside because these numbers right now, the PPM 1 is at a plus 1.32. Anything over 0.25 is an uptrend. So we're like 5 or 6 times. This is pretty much that parabolic, that extended move, and this is the completion of it. So what happens is the PPMs are going to decline, just losing momentum, but there's still, you have to look at the relative numbers. And even if we come way over here into December and look at what the forecast is on the algos, it's still a plus 0.43. It's still in trend mode. That's why these, you see it rounding off on the projections on the WTAR indicator. They're just rounding off here. So we're going to continue to climb along that price line for sure. So let's go to the daily, because this was pretty drastic. What we saw today. Yesterday, got that big move up. Everybody was talking about 5% again. Today we come in and we get hammered for all the way back to 484. We're down 2.18% in yields. A big rally in the bonds. And I'm gonna look at the future so we can see something here. This is a 10-year future, and we've got some price objectives here, which is interesting because we got 3 fib targets going right now for a move up to 107.23, 108.20, and 109.06. So that would drop rates down to probably right here about we're going to call 380. I'm sorry, 480 to maybe 475, and to get up and there's still some downtrends here, but you can see that the futures are in a very positive trend turning around, and this was probably a little mini right shoulder, and that's where this projection's coming from right now. So just know that this is a pretty bullish pattern on the 10-year. All right, let's go ahead and move on to crude oil. So crude oil, big reversal. We've been just seeing these reverses back and forth. The weekly chart's telling a real story. I think we set up really a consolidation. I've tried to set out these ranges as well as I can from the standpoint of what the expectations are. But somewhere down around 80, 81 should be the bottom in the range. We printed down to 82.08 the other day. This downtrend should complete itself. It's really a sideways pattern that's setting here. We should start to try to move back up towards the 10-period moving average, 82, 84. But ultimately, let's go to the weekly. We're seeing a peak in crude oil, so maybe this is a good sign that we get some kind of top here in oil, and we start to decline and ultimately head toward, once we get below 80, then we could head maybe all the way back into 72, 70 handle. It looks to me that crude oil is topping out here, and I know folks are talking about $100. Doesn't look like this particular cycle is where we get that at. Just for fun, let's go ahead and take a look at the monthly chart, and this will give us a little better perspective. So you can see here from a monthly standpoint, 77, 75 is probably rock bottom in this from this configuration. So while it looks pretty negative when we look at some of the daily and weekly charts, this is going to be most likely where we start to stabilize. Could be some move below that, but not a lot. guess I'll stay with gold. I'll stay with the monthly chart for right now. This bar is making Peter Schiff feel a lot better than he did last month. We had a high of 209. We had a last trade of 94. This is monthly we're looking at. Looks to me that we stabilize here. If we can stay above the 10-period moving average here as we come into November, that would put us around 1950. That's the number I've been talking about. If we back this off and go to the weekly chart, you'll see these prices right around this 1940 is where the moving averages are, and it looks like we're going to stay at least a reasonable level. PPM1 is at a 0.40, and that value is at 1938. So that'll come up underneath this pattern. So 1940, 1960 range, but I'm really just going with a 1950 to 2010 kind of consolidation here. All right, Bitcoin's next. We'll stick with this weekly chart here. We did trade just above Fib target 2. We fell short of Fib 3 so far. We're still trading 34,233. We're off 269. I thought I saw us down about 700 earlier. We'll look at the daily chart here in a minute. But this should start to stabilize and probably start to consolidate. If we stay here into Sunday night, midnight, then this will give us a RTXL signal. That's pretty much what the algos are suggesting. We just consolidate this angle of attack here. It's going to be the number that will drive this market. I suspect we probably trade between the old Fibonacci target 31,982 and looking at the Fib target 2, 34.6, probably stay in between those two levels. Let's take a look at the daily. See, daily starting to tail off a little bit. This is what I was talking about last night. We probably get sideways in here, and we've had big enough ranges. These don't look like much, but they're pretty good size ranges here so far. Today, which this will close at midnight, we're looking at 34.8, 33.7, so about $1,000 range in that little red bar there. But it does look like we're going to start to move sideways in and down toward probably into around 32.7, maybe 32,000 in that range. This rally's probably completed itself for the moment. Okay, folks, that's going to do it for tonight, right at 1 hour. So made the deadline. Once again, just you can go on that QR code. I'll put it up here before we leave. You can get signed up for the seminar event, and there'll be more details coming out over the next week or so. Just because we're finalizing some of the stuff that we're going to be presenting and getting the exact timeline together from the standpoint of the what we'll call a pre-seminar schedule from that standpoint. So let me put this code up here again for you. And you can just scan this code, or you can go to kendallreport.com/event. And I think this is going to be really fun. And I'm still looking to, at some stage down the road, be able to do a live event. But this is the closest thing I can get to it. And I'm actually looking at the possibility of having some hangout rooms where we can actually chat maybe after the session, or having a follow-up meeting after this conference to go through questions and stuff. And matter of fact, that's actually a really good idea, where we'll have like folks that came to the meeting, and especially after you went through everything and had the opportunity to digest it, and we probably do some Q&A and maybe a little follow-up live presentation with the folks that came to the seminar. So it should be fun. Yeah, I'm really looking forward to it. It's going to be a ton of work, and for all of us. Okay, I'm going to expose. I'm going to do something I always call doing a brain dump. So I got 8 hours, and we've already figured out, because we've had to narrow down the focus, just because it's going to take X amount of time to get through concepts and present them and build out everything. It's just going to take time to do this. And 8 hours sounds like a long time, but it really is going to go really fast. And so the format will be like 2 hours, a small break just for us to all refresh, and then there'll be another 2 hours after that. And hopefully with breaks and everything, we'll be done by 9 p.m. on Thursday night. We'll be done by 9 p.m. Eastern, and then we're starting a bit earlier, I believe 1 o'clock on Friday, which is a holiday, so markets are closed. So we won't have a lot of things, and we'll celebrate the veterans of the U.S. and before we get started on Friday. I really thought this was the best way, so a lot of you that have day jobs, that you can get to this thing and make sense of it. So thanks again. This is it for the week. If you can believe that, another week went by, and I'll see you on Sunday night, folks. Thanks again for everything. Hit the like button before you leave, and we'll see where everything goes on tomorrow and get set up for next week. It's going to be a big one. All right, folks. Have a great evening. Good day trading tomorrow. Yeah, Trader LS, SLA, if you can hear me over the music. Yeah, the blueprint is this master class. So, good luck, everyone. Are you sure about no holiday on the 10th? I believe it's Veterans Day. I believe Veterans Day is the 11th, but the holiday is the 10th, so the market is closed. Yeah, there is Discord. If you bought the indicator, you should be able to chat on Discord. Well, I guess if Veterans Day is open, then we're doing it while the market's open. That'll be good, actually. We can do some day trading strategies. Thanks, Ryan. But we're doing it anyway. Okay, so the banks are closed. Got it.